You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know where volatility is? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we think so, Options Insider Radio Network. A lot of new gears, a lot of new wrinkles kicking in over there on the network. Glad to see so many of you are enjoying it and embarking on this fun new journey of Options Insider Plus and Options Insider Pro. By the way, stay tuned. Options Oddities for our pro members coming up immediately after Volatility Views per special request of my guests there on that show. Usually we take a little break to reset. Nope, we're diving right in. So if you're listening live now, you get a double dose of quality content in your ear holes. No waiting. Of course, if you want to hear Options Oddities, if you haven't joined us on the pro side, have at it. Head on over to theoptionsinsider.com/plus or /pro or /shop. They'll all get you there to explain what the heck is going on. If you want those pro Q&As every Tuesday, Options Oddities every Friday, and a whole bunch more, you know where to go. And then, of course, you get access to that cool special podcast feed as well that has all that cool stuff in it and a whole bunch more. So a lot of fun stuff cooking over there at the old optionsinsider.com. Check it out. Let us know what you think. And if you have any questions, hit us up. We do love to hear from all of you. Speaking of hearing from people, let's see who we're hearing from on the old show today. First, let's go deep into the heart of Texas, where I think it's 1,000 degrees down there and there's no water. We are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from optionpit.com. Mr. Meatball, welcome back to the program. How go things deep in the heart of Texas, sir?
So I am not in Texas. I'm actually sitting here looking at the Gulf of Mexico, overlooking a beach on my balcony, podcasting about volatility. It's the only thing that could get me away from the beach.
So where on the Gulf are you?
Gulf Shores, Alabama.
Oh, so Texas adjacent.
Beautiful Gulf town. Little Mark has a baseball tournament here. So we're here for a baseball tournament, and then we are staying on the beach.
There you go. Now one of those traveling sports dads. Enjoy that. That's always a good time. As we keep on rolling out to the MIAX hot seat, where we are joined once again by Mr. Jim Carroll, the Senior Vice President and Portfolio Manager over there at TOROSO Advisors. Jim, welcome back to Volatility Views. It's been a while.
Thank you, Mark. It has been a little while. I miss you.
I wish I could say the same, but I've completely forgotten about you since your last appearance. I'm just kidding. We missed you over here as well. Jim, a few things have happened. You last joined us on February 12th of this year. A few things have happened. GameStop was kind of still, and the whole meme stock thing was kind of just nascent back then when you joined us. Now, of course, we're on wave 2 or 27, depending on how you break it down out there. So a lot to parse, a lot to analyze as we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. It is time for the Volatility Review, the portion of the show we break down what the heck is trading out there. And we had a couple of different things popping off early in the sessions here today. Started off the day kind of mixed. Coming into showtime, it seems like we've mostly trended down, even though the NASDAQ seems to be flirting with a little bit of green right now. So we're going to say mixed to red here to kick off the show. NASDAQ looks like it's literally unched right now. S&P off about 0.1%. The Dow leading the charge to the dark side. What little there is off about 0.25% out there as well. So our vol friends are fluctuating, even though net they're down pretty impressively since our last show. Come in at the start of the show, spikes had just ticked up to about a 16. It had been lower earlier in the session. That puts it down about exactly a point from where it was this time last week. And VIX Cash had ticked back up to about a 15.75. It had been lower as well. It puts it down about 0.75 of a point as well. So a lot of juice getting squeezed still out of that vol sponge over there. VVIX, the vol of vol, was at about a 115 coming at showtime. Puts it up about 6 points from where it was last show. Almost threatening, within spitting distance again of that 120 level that was kind of the floor for the entire pandemic era. It very rarely got below that 120 for most of that time. And now it's kind of been hanging out below it for a while out there. So a reflection of where we are in the vol space right now. So a lot to unpack. A lot to talk about. Jim, you are our guest, so I'll give you pride of place, sir. What's been lighting up your tape in the world of volatility this week, sir?
Yeah, so this week was really interesting because we did see a buildup in fear, if you will. It seemed that everybody was on edge about Thursday's CPI and job numbers. We saw, and particularly in the shorter term, we saw VIX 9D move up from just under 13 to just over 17 between last Friday and Wednesday's close. VVIX bumped from 108 to 121. And then, boom, the CPI numbers come out. They exceed the expectation. So you'd think everything would go to hell in a handbasket, but no. SPX rallies. VIX gets squashed. It reminded me of the Peanuts cartoon where Lucy's holding the football for Charlie Brown to kick and pulls it out of his way. We had the rug pull on people who were long vol, and even today we're seeing, as you pointed out, most of the indices down, but VIX futures can't find a bid. So the people are jumping back into the short vol pool.
Yeah, we're in that environment, Jim. I'm not sure if you got the memo where things are not exactly sensible at the end of the day. Look at, back to that infamous jobs number from a few weeks back now, which was apocalyptic. They missed it by 750,000 to the downside, and everyone thought that would annihilate everything to hell and high water, and we rallied, I think, a full percent that day. So coming into seeing a more aggressive inflation than anyone expected, of course we're going to rally and crush vol, Jim. That's just the memo. Have you not gotten it, sir?
Oh, I've gotten the memo. But the people who were bidding up the other side of that equation into Wednesday must have not gotten the memo.
Yeah, it's one of these weird environments where things you think should play out a certain way, they don't. I kind of washed my hands of that a while ago, Jim. I've gotten back to the old nugget, the old saw that I had beaten into my brain when I first walked on the floor of the SEBO, which seemed insane to me at the time. It seemed like a bunch of curmudgeons who had just, waved their hands at the market. But now when I see this stuff, okay, more buyers than sellers, more sellers than buyers. That's pretty much what it breaks down to at the end of the day. Mr. Meatball, same question for you, sir. Looking back at this crazy week, were you like Jim? Were you as surprised that we saw another pretty bad economic number in the market just kind of going, let's just rally this thing and crush the vol? And then B, along the lines of here we are now on Friday, are you surprised at how much they've crushed out of this vol, sir?
I think it's just a sign of a slowing market. I've been saying for weeks that I thought VIX is going to 15. Here we are in the 15s. We'll see whether we settle here. It would be the lowest close since the pandemic. We have, the volatility futures had such a huge contango, and vol was kind of bid up into the event that, was, maybe not as, it didn't miss the whisper number as much as maybe the regularly posted number. I think it was not as apocalyptic as maybe people were worried about, even though they were expecting it to be they thought it could be apocalyptic. I don't know. It's definitely a buy the vol ahead of the rumors, sell the vol into the news. And they are certainly doing that. You got to wonder whether the market is kind of letting this breath out. Maybe we don't do a lot for the next few weeks and vol just kind of slowly decays away back to levels where, 16, 17, 18 becomes high again, which used to be the norm. It feels like this maybe is a little bit of volatility normalization.
Does seem like that is, because you're right. In the frame of reference, we were talking about this last week on the show with Ewan, right? All these newcomers to the world of options and to the world of volatility, and some of them, we just had someone write into our Options Bootcamp show earlier this week saying he discovered options and Options Bootcamp 3 months ago. And since then, he's been pretty much just mainlining our Options Bootcamp show, 100 plus episodes now. And he felt so comfortable with options after 3 months, he went and now he has a job on the trading desk in the Netherlands, in Amsterdam. So he went from literally 0 to 60 in the span of 3 months. So that's kind of the environment we're in right now. So many people are discovering options completely anew, completely afresh. Now think about that. If that's your frame of reference, that's your time frame for understanding and being even aware and conscious of this marketplace, then yeah, a VIX of where we are 16 around seems like it's completely anemic. It's been squeezed to death. You expect something much higher because that's kind of what you're used to. And everyone has been around for a while. Even, let's say, as far back as, dare I say, at 2017, you remember this thing can get into the single digits and it can hang out there for a while. So yeah, your frame of reference these days is so important, because it shapes so much, because so much of the last year and a half has been completely insane. If you're just new to this marketplace, what Jim was just talking about with these numbers, that would seem normal to you. Yet that's the world we're all living in. Let's see what's going on, how all this is baked into the volatility futures surface out. Let's get on out to VIX futures. These things have been whipping around a little bit, obviously. Coming into showtime, the June future we saw was almost 2 points lower than it was this time last week, about 1.9 points lower. The July future down a similar level, down about 1.7 points. Interesting, all the way out to August. They really crushed the whole front portion of the term structures. All the way out to August, that was down 1.5 points as well. So a lot of juice, not just coming out of the old cash, which you might expect, but getting squeezed out of the whole front portion of the VIX futures term structure as well. Jim, I know you like to spend some time looking at ye old VIX futures. Were you surprised at how aggressively they came for this and how far out they kind of squeezed that ball, sir?
Both, yes. We've seen it's kind of a classic that the term structure has essentially retained its shape week over week. but the front end has come in very nicely. And right now I'm looking at almost a 2.5 point spread between the front 2 months. Now we've got expiration next week, next Wednesday, so that has some bearing on this. But, looking at that spread between the front 2 months, as we speak, that is the 93rd or 91st percentile of spread going back to VIX futures arriving in 2004. So, we are at the wide end of where one would expect to see the spread. That's good if you're riding that term structure down to the spot in one manner or another, short vol. But we might also expect that it doesn't get a lot better than this.
Yeah, it's obviously the next question, and one I'm sure a lot of our listeners have is, can they ring more up? We'll get to that in a little bit later here in the show. Mr. Meatball, same question for you, sir, as you've been watching this term structure, particularly the front portion, just kind of get annihilated. Were you surprised at how much they came for this thing, even on the futures side this week, sir?
They're not, July had been so expensive. It was over 20 last week. And these spreads need to get more toward normalized spreads. July trading, 3 points over spot with a month to go is still a pretty decent spread. So as low as vol feels, these futures are down, but they're still bid. And there's still a lot of hesitance to go whole hog short futures. Maybe that's why we're seeing so much activity in July puts instead of directly in the futures.
That is indeed the case. Let's get out to the options and see what kind of activity we are seeing out there. Let's start in the land of spikes, still kind of dominated by some of those same trades that we've been on for a little bit now. Let's go out. Let's do a top 7. Why not? Because that just sounds fun out there. Number 7, we got the July 25 calls. Number 6, July 20. This, I believe, was that kind of June. That June 4-way. We'll get to July in a little bit. The June 4-way out there. So number 7, the June 25s. Number 6, the June 20s. Number 5, the June 17 puts. Number 4, the June 15 puts. So it's kind of that funky strangle / iron fly, call it what you will. Iron condor. It's a bit of a weird one out there. I don't really know exactly which way they put it on. They kind of put it up, splitting the uprights on both out there. Maybe we'll get the MIAX guys on next week. They can give us some more color on that one. But it seems like they maybe came out and picked up that iron condor, looking for a little bit of movement. Maybe. Which way would you like to have that on? 15, 17, 2025 iron condor right now, listeners, and pick your product, spikes, VIX, whatever. Which way would you like to have it? You like to sell it, or would you like to buy it? Then going on to the top 3 here, we got the July 50 calls, 1,000 of those. Number 2, 1,000 as well of the June 25 puts. And number 1 out there, 1501 of the June 50s, 5-0. So that 50 strike continues for whatever reason to have some fascination for the folks out there in Spikes land right now. So some interesting trades still afoot out there in the land of Spikes. Coming into VIX. VIX, as you might expect today, doing a wee bit of paper on the options front. It had about 581,000 contracts on the tape as of a few minutes ago. Let's see if that's ticked up at all. The ADV right now, by the way, 613,000. It's up about 18,000. So it's managed to tick over 600K and maintain it throughout the entirety of the week. So that's pretty decent paper. Yeah, it has ticked up even since we last checked it a few minutes ago. It's up to 770,000 contracts right now. So VIX is, shall we say, on fire right now. That's a lot of paper. It looks like it's on tap here and on pace for a good 1M day. Haven't seen one of those in a while. And again, maybe some of that just going back to what we were talking about earlier, people's surprise or maybe exuberance or just exasperation at the fact that how much they really have been coming for this thing over the course of the past week. Let's break down our top 10 size positions out there in VIX land right now, give you a sense of kind of what's open, the lay of the land out there. Cost you 163,000 contracts to break into the top 10 in VIX land right now. That gets you to the June 17 puts. By the way, it's 60-40 puts to calls right now. So it's still put heavy, put dominated, but by no means is it, 9-1 like it used to be, or 10-0 like it used to be not too long ago. So yeah, number 10, $1.63 of the June 17 puts. Number 9, 168,000 of the June 30s, our first call on the list. Number 8, 171,000 of the June 60 calls. Again, one of the most fascinating strikes. Number 7, $1.76 of the July 18 puts. Number 6, 191,000 of the June 15 puts. Number 5, all the way up to number 5 before we break 200K, 218,000 of the June 16 puts. Number 4, 235,000 of the July 16 puts. Number 3, 265,000 of the July 17 puts. You know what number 2 and number 1 are. They have been for some time. Ain't looking too good for this guy right now, or gal who put this on. It's that July vertical, listeners. The July 25-40 vertical. The 40s are open for 265,000, and they've added more of the 25. Someone has, to the tune of 299,000 of these bad boys. They were about equal when they first went on, so 30-odd, 40-odd thousand more of the 25s have traded since that trade went on. That vertical went up, so. Yeah, that one, at least right now, not looking good. Obviously, he did it out to July, so he's got some time, but he needs some movement out there. Mr. Jim, what are your thoughts here on what you're seeing? Anything lining up your tape out here in the world, in the world of VIX options this week, or maybe any of these top 10 positions lighting up your tape? And by the way, you can admit it to us, that July vertical, that's you and Toroso, right?
Maybe not. I don't know how that's going to work out. We'll see. I'm not surprised that the weight is on the put side. Although, just listening to the drumbeat in my Twitter feed, there have been a lot of people trying to figure out where the right spot is to get long some of this stuff. And looking at what I see today anyway, that seems a little bit premature at best. And so, good luck with that July vertical. I'm just not sure I see that panning out, but a lot of things could happen between now and then.
I guess it could be worse. He could have had June, right? So
exactly.
Like that's pretty much the only way it could be worse right now. But yeah, that one looked interesting when it first went on. We were all kind of scratching our chins going, that's an interesting one. Want to pay attention to that one. Didn't really want to piggyback it, but you wanted to watch it. And it seems like that impulse was a good one because it's so far at least non bueno, but we got time. It's July expiration. Mr. Meatball, same question for you. Anything catching your eye out there in the world of VIX options this week before I break down the day by day, any of these top 10s, or indeed your thoughts on this ever dwindling, at least not from a size, but from a value perspective, July vertical that is still dominating the VIX OI, sir?
Yeah, it's probably not going to be the number one next week because we are seeing just massive volume in July options and in June options. Today, with open interest already over 265,000, we got 70,000 plus of the 17 puts trading. The 18 puts are flying as well. We're talking, 45,000 of the July 18 puts, and 20 and 29,000 the 16s and 15s as well. In June, already 92,000 of the 16 puts have traded. And if you're looking for a cheap bet for next week, the June 15 puts are nickel a dime, and 56,000 of those have traded, 191,000 open interest. I'm wondering whether with all of these market makers being short this much downside, if that July or June future starts to press on these, could you see a little bit of a kind of short vol gamma squeeze on the downside on market makers as they hedge off with VIX futures? And my thoughts are it's entirely possible. I'm wondering whether we're going to have a sub 15 settle next Wednesday. It's not going to be. I'm going to bet entirely against it for our crystal ball because that has been working. But I personally think that we've got a pretty strong odds of a settle in the 15s, if not lower, for next week, and we're seeing the volume to boot. Those 16 puts are 40 cents. So, and again, 90 some odd thousand of them trading. So we are seeing a put palooza, and that has been a big driver of the pop in VVIX that we've seen.
Yeah, we are setting up for we're in an environment for just a crazy, wonky settlement, listeners. So be prepared for that. Strap your boots on if you're going to go through the settlement next week. If you're going to go, marks are out, take a flyer out there, that's fine. That's what those kind of trades are for. If you got a more substantial, meatier position, maybe it behooves you to take it off going into settlement this week, because that just has the air of it. It could kind of be anywhere at this point, and you don't want to leave your position up to that much chance if you can avoid it. Let's see what's going on out here right now in VIX options land. As Mark mentioned, some paper on the tape, most of it on the downside today, 770,000 contracts on the tape right now in VIX land. So already well past the ADV. The number one most active contract out there today is the June 16 puts, closing in on 100K of those already, 93,000 for number one. Number two, the July 17 puts, 71,000 of those. Number three, the June 15 puts. Getting a theme here, listeners. 56,000 of those. Number four, the July 18 puts, 45,000 of those. And the June 17 puts, number five, 42,000 of those bad boys. So pretty much a healthy and sizable put strip dominating the top five here today, listeners. You got quite a few contracts just in that top five out there. Yesterday, also a pretty active day, though. Can't measure up to today. 646,000 contracts on the tape on Thursday. Once again, mostly puts in the top five yesterday. The most active contract, 63,000 of the June 17 puts. Number two, 42, almost 43,000 of the June 16 puts. Number three, 31, almost 32,000 of the June 18 puts. Number four, just a tick under 30K of the July 17 puts. And rounding out the top five yesterday, a bit of a surprise, sneaking in there, 27,000 of the July 70s. Looks like almost 27,000 of the July 16 puts went up as well. Could there possibly have been a July 1670 risk reversal? That would be awesome if that's what's the case. I'll have to go dig into that and see what was going on with those 70s out there. But the size lines up. That certainly would be a fun one if that was the case out there. Wednesday, a little bit less paper. 420,000 contracts on the tape. The most active contract, 55,000 of the June 20 calls. So we got some calls topping the list there on Wednesday. Maybe getting back to what Jim was alluding to there with the Lucy holding the football. Some of those call lovers, or call traders at least, maybe got a little bit of the old Lucy yanking the football away from them. Number two, 35,000 of the July 17 puts. Number three, 27,000 of the June 16 puts. Number four, 20K of the June 18 puts. And round out the top five on Wednesday, 20,000 as well of the July 18 puts. Out to Tuesday, a little bit less paper as well, 394,000 contracts on the tape. That's why it surprises me that the ADV has managed to stay above 600K, because the earlier portions of the week, not that active. 394,000 contracts. On Tuesday, most active contract, about 25,000 of the July 35 calls for number one. Number two, 22K of the June 17 puts. Number three, 22,000 as well. The June 18s, probably a bit of a vertical going up there. Number four, almost 22,000 of the June 35 calls. And rounding out the top five on Tuesday, 21,000 of the June 16 puts. And Monday gets the award for the most anemic day of the week. Exactly 250,000 contracts on the tape on Monday. Most active contract, June 47 halves. Someone crushed a bit on those. 13,700 times, followed by number two, the July doubles, also 13,700. So maybe a bit of a roll from the June 47 halves out to the July doubles. That's interesting if that was the case. Also, the July 25 is going up for similar paper, 13,200 times. So number three. Number four, 13,000 as well of the AUG 18 puts. And rounding out the top five on Monday there, 11, almost 12,000 of the June 18 puts. So some interesting paper going up here this week in all things VIX options out here. Let's keep on rolling out to the land of the products you folks love to fade the most, and it's hard to argue with it this week. That trade has been rewarded in spades. Let's get on out to VXX first. It's maintaining now around 30 3/4, 30.80 or so. That's about where it was right around the start of the show as well. It puts it down still nearly 3 points, about 2.8 points from where it was this time last week. So yeah, if you haven't been paying attention for a while, listeners, that means we just reverse split to 40 a few weeks ago, and we've already got about 10 points of that off, pretty close to it here already. So that's pretty aggressive erosion out there in the land of VXX. You know, things are crazy when you can get run over to the downside in VXX pretty easy. That's the world we're living in right now. Mr. Jim, I know you love these ever-eroding ETPs. What's your take on VXX, you know, leading into the split and now coming out of the split? It seems like it's just a completely different monster. It's it's like a biotech now. It moves so much. What are your thoughts on the madness that is VXX these days, sir?
Well, you know, we get the reverse split in VXX and VXY and UVXY, and it's like throwing meat to the animals. They're out in force to short the hell out of these things because, look, the reality is it's not as easy to short vol as it was way back yonder in the days of XIV. And so the more and more people get their short exposure, if they're not doing it in the futures, they're doing it in VXX or they're doing it in VXX options or UVXY and UVXY options. So, you know, there's a tremendous amount of activity, both in the underlying and in the options complex. And they're the favorites right now.
Have you been trading VXX up at all, sir, since it's been moving and shaking quite a bit?
Well, let's just say I'm not long VXX.
That sounds like it's a pretty smart play right now, sir. I know you got that size July vertical and VIX to watch out. So you got some other things to worry about other than being. If you were long VXX on top of that, that'd be a lot to handle. Sir.
Well, you have to hedge off some of these things,
yes,
Mark. You know that.
Yes, exactly. Mr. Meatball, same question for you, sir. I know your crazies in the land of the pit chat love themselves a little bit of VXX. What's been going on out there? I know you like it a little bit as well. What's been catching your eye on this just remarkable erosion continues in VXX, sir?
Yeah, it's been a nice play to sit and but to sit on puts and watch them die. It's one where, we will run in a calculator. I'm sure Jim does the same thing, kind of what the decay looks like and where our volatility expectations go, and try and play VXX and more often UVXY, which we're going to get to next, against what our calculators are telling us. And when we do need a hedge, we don't use these products, we use VIX, which is why I bought 250,000 of the July 25-40 call spreads back yonder.
I knew it. I knew it was you. All right. I've been unfairly besmirching Jim all this time, but I knew it was you out there, sir. I knew you loved yourself a little bit. You couldn't resist, could you? A little bit. You got all those VIX puts. You got to do something against it. So a size VIX call spread in July makes a certain amount of sense. Let's see how much sense it makes out there in VIX options land today. VXX options land. Pretty decent paper on the tape right now. The ADV has ticked up to about 207,000 contracts, up about 8,000. So I think the nadir for the volume out there in VXX, I think we finally have hit it and moved past it. It seemed like those lingering issues around the splits and VXX1 and all that nonsense symbology seems like it's finally getting worked out because the ADV has been ticking up for the last couple of weeks pretty steadily. Not a ton, but it's better than losing 30K at a clip or 40K at a clip. Today, so far, already 204,000 contracts on the tape in VXX. So it looks like it's going to hit that ADV again today. Let's break down the top 10 out here really quickly in VXX land. Let's make it the top 5, because some of these strikes are still not split adjusted going out to the VXX1, the old school. So it gets a little confusing for some people. Number 5, 23, almost 24,000 of the June 20 calls. Again, old school. Number 4, 27,000 of the June 28 puts. That's an actual June 28 as opposed to a VXX1 print. Then we've got to number 3, 30,000 of the June 11 calls. Number 2, 32, almost 33,000 of the Sep 10s. And then number 1 with a bullet, actually a legit VXX print, is finally the number 1 position again. It's 37,000 of the June 30 puts. That seemed like a bridge too far just a week or two ago, and now it's pretty much staring us in the face. So VXX, the downside beast that keeps on giving. Let's see what's lighting it up out there today. Actually, it's not all paper that's going out today. Usually in VXX, you get to the end of the week, people taking off stuff that's going away pretty quickly. There's a little bit of that, but not as much as you might think. The most active contract in VXX right now are actually the legacy 8 puts in June going out next week on the 18th with about 13,000 of those. So maybe someone finally coming in here and taking the advice that Short Ball Dave gave a few weeks ago. If he got some positions on in the old school legacy VXX1, get the heck out of Dodge on those because liquidity is not going to improve in those. This guy waited a little bit, but finally getting the heck out of Dodge. Number 2, actual June 31 puts going out today for about 12,000 of those. Number 3, AUG 21 puts, 11,500. Number 4, going also back out to some legacy contracts expiring next week. The June 9 puts, 10,800 of those. And number 5, we've got expiring today. Good old June 31 calls, 10,600 of those bad boys as well. Going on out to the other side of the erosion coin, of course, UVXY, a product we used to mock and malign, but these days seems to have found its use case again with this reverse split and actually doing some paper these days. Not so much today, though. 76,000 contracts on the tape. Doesn't seem like the VXX/VIX love is really trickling down to UVXY. But then again, it is still kind of much closer to its reverse split than VXX. I think some of those symbology issues that plagued VXX are obviously still hampering things in UVXY because there's only 76,000 contracts on the tape and the ADV is down to 241,000. That's down nearly 50,000 contracts from this time last week. So obviously something is up out there in UVXY. Again, let's do a top 5 because these positions are all dominated by pretty much legacy contracts. Number 5, 17,400 of the June 13s. Number 4, 19,600 of my favorite contract out here today, the June pars, 100s, almost 20,000 of those. Number 3, 25,000 of the June 14s. Number 2, 30,000 of the June 10s. And number 1, with a decent sized bullet for UVXY, certainly, 42,000 of the June 5. So it's all calls all the time in the top 5 here in UVXY. But again, those are legacy UVXY1 positions. So those are going to go the way of the dodo pretty quickly. I don't see any actually in the top 10 right now. I don't see any quote unquote non-UVXY, aka split adjusted positions out here, at least not yet. In terms of what's lighting it up out here today, we got about 4,400 of the June 30 puts. These are going out today, followed by number 2, about 2,500 of the July. Actually, no, these are June. The June 25, June 70s expiring on the 25th. These are in the weeklies, followed by about 2,400 as well of the June 67 calls, also expiring on the 25th. So someone putting on a 1 week or a couple of week 3-point vertical far out of the money in UVXY. That's an interesting choice if that is indeed the case. Number 4, 2,200 of the June 30 puts, and number 5, 2,200 of the June expiring today 30 calls. So weird paper afoot. Mr. Jim, as I mentioned, we used to kind of mock UVXY, and now it seems like it's kind of become a little bit of a darling out there. Not so much volume-wise right now, but that'll probably come back once all these issues are sorted out. What are your thoughts on UVXY, and has it usurped VXX for you as well in terms of your downside instrument of choice, sir?
I wouldn't go that far, but UVXY definitely has seen a pickup in popularity. There are quite a few folk out there who look at it because clearly if VXX is subject to, the degradation, UVXY is just 1.5 times better in terms of the downside potential. So, if you do the math and if you can find the liquidity that you need, UVXY is a great vehicle to play the downside and volatility.
Certainly seems like it has become a bit of a darling out there. Mr. Meatball, I know it's certainly a darling for you and your crazies over there in the land of the pits. What's been lighting up your tape in your new favorite? You kind of kicking VXX to the curb for UVXY. What's going on in your new favorite, your new lady out here, UVXY?
Yeah, UVXY is great for kind of retail traders wanting to short vol. You're right, Jim. If you're institutional, finding the liquidity really slam on it can be difficult, but it's a great product for retail traders that want to short volatility because, if you're just doing 10 or 15 or 50, the market makers will fill you pretty nicely. You want to do more than 1,000, it starts to get pretty sticky to get that thing filled. I'm watching that 30 strike. I've ridden down the 36s, 35s, 34s. I keep having to roll down and back and close out profitable winner. I keep have to, like, it's a punishment to win. It will move quickly upward on a real vol rally, something people need to be aware of. But it's definitely been a nice product to sit back and be short on currently. In both Vol Edge and in the Robinhood Trader, we are carrying short positions in UVXY, and I am carrying some myself as well within some of the other trading that I do.
He gives a positive spin to down and out, doesn't he, Mark?
He does. He does indeed, which is why we keep him around here. That, and of course, all the tasty recipes for now Texas brisket and everything else he's going to share with us later on the show. Stay tuned for the Meatballs Cooking Hour in a little bit. Speaking of things that are cooking, single names are kind of where a lot of the action and a lot of the interest is these days. If you listen to our option block show, we break down kind of the most actives. It's not usually out there in the indexes these days where all the action is. It's definitely out there in the single names. All these crazy meme names have been lighting it up. Jim, I know you mostly pay attention to the large index vol and all, of course, the constituent components around there like VIX and VXX and everything like that. But it's kind of hard to ignore the elephant in the room, which is meme 2.0. Call it what you will. What's your take on all of this, and what have you been noticing and watching and perhaps even trading over there in light of all this renewed meme madness, sir?
Well, I have personally and for clients stayed away from the meme madness. I'm happy to watch and observe, but the ability to whipsaw, even intraday, much less day to day, is more than my. Notwithstanding my VIXologist and volatility spin, there's volatility and then there's absolute madness. So I watch it, I observe it. I find it interesting in terms of its potential knock-on effects. I wonder in part if some of the activity we saw earlier in the week in the vol complex might have been related to what was going on with GME and AMC and all that stuff. We looked at CPI and jobs, but maybe it was really AMC and GME and BB and BBBY and all the other crazy stuff that goes on. But I sit in envy of people who figured out how to make money trading all that stuff, but it doesn't fit my mandate.
So TOROSO Advisors doesn't allow you to go crazy short the wings of AMC, sir? What kind of mandate is that? What kind of nonsense is that? You got to adjust those parameters.
They're not handcuffing me. I'm handcuffing myself. And TOROSO, we have a few fun things in the ETF space. We are the purveyor of the block ETF, which is all things blockchain related. So, we've got sexy here and there.
All right. Sexy. Speaking of sexy, Mr. Meatball, I know you've been watching a lot of this crazy meme madness out there as well. That's kind of a big part of the whole, what is it? Used to be Robinhood Trader. Now it's Gamma Radar, I believe. What's been lighting up your tape in the land of meminess this week, sir?
Memeness has been all over the place. We've seen, it's like a new one pops up. It's like playing whack-a-mole. We had AMC blow up, and then BlackBerry blew up with it. We've seen Wendy's blow up, Clovis Healthcare, whatever that is, Clove. I've actually created an entire list of meme stocks that I follow now. Wonderful names everyone should want to own, like Blue Apron and Bed Bath & Beyond, and I think my favorite one is Vinco Ventures. I don't know what Vinco Ventures does, but my guess is it involves you getting your knees hit with a lead pipe if you don't pay up. You got Express Holdings, you've got Fuel Cell, Fizzy. The memes go on, and every day it feels like there's one just completely going bananas. It's just kind of figuring out, well, which one is next, and that is I think the great question. And today, the biggest mover on my meme list is AMC, followed again by Vinco Ventures and Ride. I don't know how anyone could lose owning Lordstown, but Lordstown is up over 8%. And then you've got Express Holdings and Sensonics and Fubo. Who doesn't want Fubo? And then finally, Build-A-Bear Workshop, because everyone knows that a place where you go in and build a bear should be a multi-billion-dollar company.
Yes, it's almost like the main filter for these meme stocks is the crappier they could possibly be, the more memey they are. Go ahead, Jim.
No, I think the secret is, and Mark, you must not have uncovered this looking at Vinco. The secret is the ticker needs to start with two B's, because Vinco is B big, and then you've got BlackBerry, you've got Build-A-Bear, which is BBW, you've got Bed Bath & Beyond, BBBY.
We call it Bloodbath and Beyond here.
But I think the Clove one was particularly interesting because that has two memes, right? It's a SPAC.
Oh, everyone loves the SPACs. All it needed to do is be a SPAC that creates NFTs, and it'd be the perfect meme.
SPAC, NFTs, heavily shorted, all sorts of fun going on there. Maybe trading for like 30 odd cents. And also NFTs, and also you invest heavily in perhaps Dogecoin, and then you're just off to the races. All bases are covered out there. You want all your bases covered on the earnings vol front, listeners? Head on out to theoptionsinsider.com. Click on the Options News and Articles tab. You get the latest earnings move results, and earnings season reports. We've got, looks like here, what do we got here? We got an earnings move results report here for Restoration Hardware. This one popped off on the 9th. They were pricing in 611 going into their announcement, and they were pricing in from a vol perspective 7.4%. They delivered nearly 15%, so a lot of juice out there in Restoration Hardware. One of the few names to actually buck the trend, because outside of that, we didn't see a heck of a lot of vol. In fact, this season so far is averaging down to about 74%, with this last week so far averaging in at about a 62%. So this last week looking pretty bad. It's not quite as bad as week 2, which was 51%, but it's right behind it. So there's only one week that even got close. That looks like it was week 5 with 96%. So close to breaking even on that week. But everything else, been yet another blood red season for anyone who wants to own a little vol in any of these names. Coming up this week, we have Oracle on the 15th. They were pricing in, 84.5 is where they were trading. They were pricing in $3.46. In the past, they've moved $4.17. So but they've gotten the memo out there in Oracle. We'll see if that holds out. Let's see if your comments and questions hold up. It is time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility voicemail. That's like this comment. Let's kick it off here from Sistos. I think he's feeling what we're all feeling right now. He just says, VIX downside. Damn. I like that. Maybe that's a title for our show if it wouldn't offend all the family-friendly folks out there. But still, it's a good one nonetheless out there. I'm with you, Sistos. Damn. That's a lot of downside on the tape over the course of just since our last show, just over the course of the past week. They are coming for it. As I like Jim's analogy at the top of the show, Lucy has perhaps ripped the ball out from all of us here this week. Let's go on. Here's this one from Jeremy. Jeremy says, similar theme here. This move down has been pretty big for me in VXX. I've been playing it with straight out of the money. I'm assuming he means straight out of the money puts. They are expensive, but have paid off. I'm a little less sure about the continued downside, though. So this is written weirdly. So I'm thinking about switching to out of the money put spreads or maybe flies. Maybe with a VIX out of the money call kicker to catch the inevitable switch back. I'm guessing those will pay off better than VXX calls, or should I keep it all in the same product for simplicity's sake? Thanks for the show. Well, glad to hear, Jeremy, the VXX downside has been paying off for you. I get it. Sometimes it's hard to wade into those put waters when you see some of the premiums that are out there, but then you see what this thing has been doing of late, and it's hard to argue that they aren't merited out there. But you're right. I can see why you have a little bit of trepidation now. We have sold off pretty aggressively out there over the course of the past week. Jim, what do you have your thoughts here for Jeremy? He's done all right so far in just straight up downside puts in VXX, but now he's thinking about switching things up, maybe going for spreads, or maybe he mentions even put flies just to kind of mitigate some of the outlay there to the downside. And then also perhaps covering his bases with a little upside either in VIX or in VXX. What do you think about that, sir?
I think the challenge is that we had a little bit of a jump in volatility back at the beginning of May, right? Put some premium in all this stuff. And now we're sucking all the premium out. So the question is, and Mark's got better expertise than I do, what's your best structure in a lower premium environment if you think you want to play the continued downside? I got to pass the baton to the option expert.
There's no passing here on Vol Views. All right, we'll allow you one free pass per show here, Jim. All right, Mr. Meatball, same question for you. This is kind of a different variation on kind of the same question we get almost week after week, which is kind of what's the most efficient, cost-effective way to play the downside. He's going VXX. You might recommend UVXY. I know that's your favorite right now. And also, he wants to know about the upside. We've had different flavors of this before as well. VXX calls, VIX calls. If you're concerned about a little bit of retracement, what's the best way to hedge it? So first off, do you like his put spreads or put flies to the downside in VXX to try to mitigate the outlay? And then B, if he wants to hedge the upside, what's your preferred vehicle, sir?
Yeah, so downside puts in VXX or put flies in VXX makes sense, especially if you do them long dated and wide. Near dated, I'm really prefer just a straight up put in UVXY. Yeah, it costs a little bit, but when you do the calculation on where it will price itself, they're actually relatively inexpensive. On the upside, I would only use VIX. I would never use VXX. I will go long VXX and UVXY, but only once we've already seen the curve make its move to flat. If I'm looking for more of a static hedge, VIX options are always the play because they have a real stickiness that UVXY and VXX don't have. So, for instance, if I want to hedge with the 20 calls in VIX, today, that would be similar to buying calls on VXX, let's say, that are, 35. Okay? Now, in 2 weeks, that VIX 20 hedge will still be 20. In VXX, because of the decay in the underlying, you'll be using like the 32 call because VXX will actually be so much lower. So VIX for a static hedge is a far superior way of trading volatility and hedging volatility than the ETPs are themselves. I really do not like either of them for setting up static hedges. They're good for a dynamic hedge once the market starts moving, but not as a placeholder hedge in a market that isn't experiencing volatility.
I concur with all of that, sir. As we keep on rolling into our final segment, it's time to see if the vol market concurs with any of us. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into The Crystal Ball.
All right, everybody, let's do it. It is time for the Crystal Ball, the most difficult, indeed the most dangerous part of the show. This is the portion where Jim wishes he didn't jump on the show today, because these are dangerous waters to wade in here, Jim. And coming into showtime, as dangerous as it might be, once again, I'm actually looking pretty good here. Spikes is at about a 1590, so it's come off about a tenth of a point since the start of the show. And VIX Cash, as of a few minutes ago, was at a 15 3/4. Now it's at a 1570. I was at a 1575 this week, so I am within our threshold of victory, 0.1 on VIX Cash, and I'm pretty close, about 0.15 away on Spikes as well. So I'm going to ring that bell. Winner, winner, chicken dinner for me this week. A little bit of erosion. Well, that was a little bit more erosion this time, but still some erosion coming off the tip there, I think, it's been working out for me the last couple of weeks. I kind of like that one. Mr. Meatball, he says he's fading his book, was going to the upside again to 1818. None of that this week. And Mr. Sinclair was feeling a lot more vol to the downside. He was feeling a 1510 as I, quote, put a gun to his head and made him pick. He picked a 1510. We didn't quite get there, Ewan. We got pretty close, but we didn't quite get there. So that means, once again, I am the winner, winner, chicken dinner here. Yet another bullseye, a couple of weeks in a row. That's actually, given how crazy this past week and year and everything else have been, it's not bad. I'll take that. All right, so let's go on out now to see what's going on for this week. The question is, do I want to go first and set the table, or do I want to let our guests go first? What kind of charitable person? And you know what? I'm going to dive in first this week. I'm going to set the table, blaze the trail, let all the others follow me. And if they want to scum me a little bit, have at it. I can handle it. All right, so I was at a 1575 this week. That's pretty much exactly where we are in both of the vol products out there right now. Again, 15 handles has been pretty juicy. They've come for it pretty aggressively. Let's see. I still think they could squeeze a little bit more out of this, but not a ton. I'm still feeling a little bit of reversion throughout the course of the week, and then how much of it comes back out by Friday's show, that's the question. Actually, I'm going to change that. I was just going to say 15 double, but I'm actually going to tick it up. I'm going to say 1605 this time next week. So we get some reversion, and then we comes back off again, and we kind of settle out a little bit north of where we are right now. Since Mr. Meatball, you whiffed horribly, we'll go out to our guests. Mr. Jim, sir, what are you feeling for volatility this time next week?
Well, the same theme, Mark. I think we will see some squeeze, particularly given that we have expiration next Wednesday morning. But I think
be prepared for a 1385 print. You watch.
Who knows, right? could be a 14 handle print. But I'm actually going north of you for Friday. I'm going 1750.
Wow. So aggressive reversion back up there. Interesting. I thought I was gonna get some flack for giving a 16 handle. Jim saying 17.5. Some folks have been trying to play that card for a little bit, most notably Mr. Meatball every week, and then of course Mr. Rhodes and others. And so far it hasn't played out. Is this the week that it will play out? Let's see, Mr. Meatball. One more time unto the breach, sir. What are you feeling for this time next week?
Yeah, well, so far every time I've bet against my book, it's worked. And my book is short vol, so I got to go higher. And I'll just stick with 1818. That's a good number. That worked really well this week.
Yeah, worked awesomely. Not so much for our listeners who maybe traded around it, but for you who says he's quote unquote fading it. We'll see. So there we go. 1818 for the Meatball, 17.5 for Jim, and me uncharacteristically playing the dark side this week at a 1605. All right. That music means that'll do it for vol views. But guess what, listeners, the folks on the pro side, your week isn't done yet. You get more in your ear holes. Rock Lobster actually waiting in the wings. He was champing at the bit. He would not let me do another options oddities unless he could chime in and quote unquote show me how it's done. So I got to see what he has in store for us. He's actually waiting right now to hop back on. So we're going to do it a live transition. So you folks don't even have to wait at all if you're listening live. If you're listening after the fact and you're a pro subscriber, then you can, of course, grab the pro feed and check out options oddities and all the other cool stuff we have going on over there for you. But before we go, let's go back around the horn. Let's start with Mr. Jim. You did an able job in the MIAX hot seat this week, sir. If folks want to check out what you have cooking over there in the land of TOROSO, or perhaps your vol musings on Twitter, where should they go? What should they do?
Best way to find me is on Twitter at VIXologist, mixing those volatility cocktails, and on the web at TOROSOINV.com.
Do you have a favorite volatility-themed cocktail you want to share with us, sir, before you go?
Oh, that's a tough one. This time of year, we're heading back to tequila.
Just straight tequila.
That's
your vol theme. I guess there's some. You drink some tequila, some volatility could ensue. I could see that.
It has been known to happen.
Yes. All right. So there you go. Jim's volatility cocktail suggestion: tequila. All right. Follow him at VIXologist on the old Twitters. And Mr. Meatball, if folks want to check out all you got going on, where should they go? What should they do?
Yeah, go to optionpit.com. We're putting out VIX content every day. Go to the VIX Edge and sign up for emails right into your email box. You can't miss with this great content and analysis I'm putting out every day. I know Jim Carroll comes looking for that in his mailbox every day, midday. He loves it. He's always telling me, "Oh, my VIX Edge, it's like waiting for Santa every day."
Yes.
So optionpit.com and click on that VIX Edge and get it. On Twitter at OptionPit. And give Jim Carroll a follow as well. He's great.
So he's there sipping his tequila and waiting for his Vol Edge newsletter. You can check it out for yourselves, listeners, at optionpit.com. You know where to go to learn more about all things spikes. MIAXoptions.com/spikes is the place to go. Check out that shift search while you're at it. It's free. It's really cool. And they update it every Friday, so new stuff every week. Check out their new stonks mode. Pretty cool. All right, on behalf of everybody over there in the land of MIAX and Jim and Mr. Meatball and indeed myself, we got to go. I got to get on to the next show. So we'll see you back here on Monday for the option block all the way through to another episode of Volatility Views on Friday.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.